Good afternoon, everyone, and welcome to today's webinar. On behalf of Burraq Partners, I would like to sincerely thank you for joining us and for taking the time out of your busy schedules to be with us today. My name is Rehan Zulqadar, and I'm the CEO of Burraq Partners, a Riyadh-based consulting firm supporting organizations across Saudi Arabia with taxation, regulatory compliance, finance transformation, and risk management. We work very closely with CFOs, finance leaders, business owners to help them navigate an increasingly complex and fast evolving regulatory environment. So today's session is designed to be practically focused and timely. Over the past year, we have seen a clear shift in how the Zakat Tax and Customs Authority engages with taxpayers. Assessments are becoming more frequent, more data driven, and more sophisticated. At the same time, phase two of e-invoicing has introduced operational, system, and governance challenges that many organizations are still working through. When we add recent VAT law updates and clarifications, particularly those impacting Q4 and year-end reporting, it becomes clear that tax compliance today is no longer just filing returns. It's about being continuously prepared. The objective of today's webinar is not theory, it is to share real-world insights that help you. Our discussion today is structured into three concise segments: common triggers for ZATCA assessments, preparation for defensible responses, and proactive risk mitigation. Phase two e-invoicing, practical integration challenges and lessons learned from CFOs. Recent VAT updates with a focus on what matters most for Q4 and year-end reporting. We will try to keep the session interactive as far as possible, and we request you to submit your questions in the chat window that we will try to address in the Q&A session. Now, I'm pleased to be joined today by three highly experienced professionals, each bringing a strong practical perspective. First, Mr. Abdul Sattar, Director of Taxes at Burraq Partners. Abdul Sattar has extensive experience in VAT, tax compliance, regulatory advisory, supporting organizations across Saudi Arabia in managing ZATCA requirements, assessments, and building a defensive tax position. He works closely with the clients on assessment readiness, documentation, and proactive risk mitigation, and will be sharing his insights on the above mentioned topics. Next, we have Mr. Huzaifa Machiyara, Director of Group Controlling at Sira Group, one of Kingdom's leading travel and hospitality group. Huzaifa oversees financial control, reporting, and governance across complex and diversified operations. His hands-on experience gives us a valuable CFO-level perspective on the topics from a financial control perspective. Finally, I'm delighted to introduce Mr. Ahmed Mukhtar, who serves as Head of Tax Global at Al Khuraif Petroleum Company. Ahmed brings deep expertise in tax strategy, governance, and compliance across multinational environments. His experience in managing VAT risk, regulatory interactions, and assessment responses will be especially valuable as we discuss recent updates. Thank you all, and thank you our panelists for joining us today. Now, this session is designed to be interactive, as I discussed earlier, and practical, so we encourage you to think about how these topics apply to your own organization. With that, let's begin our first discussion on ZATCA assessment, why they happen, how to prepare for them, and how organizations can stay ahead of potential challenges. So I would like to hand over this to Mr. Sattar, who can take the conversation forward. Please, Mr. Sattar.
Thank you very much, Mr. Rehan. I would like to thank all of the audience and my colleagues, and very good evening. Our first segments, as Mr. Rehan has discussed, is about the assessment. In these assessments, you can see the ZATCA has changed it's the assessment model into AI based, and they're maintaining themselves with the many of the IT tools for the assessments. And for these assessments, obviously there is a need of the day to documents and make it reconciliation promptly and timely basis, and so that we can be readily available for the assessment and related issues of this assessment life cycle. In this segment, we will make it presented in the four aspects. First one is assessment life cycle. It's start from the submission of the returns, and after that returns are, it may be zakat, it may be VAT, it may be corporate tax, and this assessment start after the submission of the returns. Secondly, we will discuss what are the common triggers point, risk points that attract the assessment. And meanwhile, we will discuss defense documents, what we should prepare for that. How can defense ourselves, our organization, to be ready for these assessments. And at the end, we will make tax planning. I mean, that is readiness books that should be available for, where they should be ready for every aspect of the assessment, maybe handled by the through ZATCA. So obviously these all aspects have a some business aspects. And next I will submit my assessment life cycles. Typically in practice, ZATCA assessment follow a fairly standard life cycle that start from scope confirmation, and it's begin with confirmation followed by formal information request, related documents requirements. These then move into evidence extraction and submission of record. And after a round of clarification before the ZATCA, there is outcome has issued, that in the form of assessment order. Where there is disagreements, objection, or maybe escalation that may follow after this series of submissions, and this where having a structured and well-prepared defense file become a critical, managing risk and timeline effectively. So first type cycle start with the issuance of show card notice and submission of the related records. So next, please. Now, I will like to discuss what are the key trigger points. When we look at ZATCA assessment, it is pertinent to understand that they are largely risk-driven. Typical trigger includes data inconsistency, unusual VAT pattern, and the transactions that are either complex or high in value. We also frequently see assessment arising from weak supporting evidences, gaps in related party documentation, and transfer pricing method, are poor record retention and master data quality. From ZATCA's perspective, benchmarks play a big role. Outliers such as abnormal VAT ratios or sudden margin movement often raise red flags and lead to the deeper review. These are the key trigger signals that attract the assessment. Now, what we have a defense. Now, defense point of views. ZATCA expectations are quite clear and increasingly focus on the transparency. So they need transparency, system integrity. They expect a complete end-to-end audit trials backed up by robust supporting documents and reconciliation. This means being able to trace a transactions seamlessly from a contract to the invoice to delivery, payment, the general ledgers, whatever, finally to the VAT return. Just as important, ZATCA expect minimal manual works with control embedded with system rather than really rely on the after time fixes. So defense files is the most critical and most file to counter with the assessment orders that may be in their favor or maybe in against the documents. Next, please. No, ZATCA expect that should be, we should have a clear-cut end-to-end trials. We should have a clear supporting documents and proactively invoice relating to the invoice assessment, contract invoice, payments manual, whatsoever. So this is the ZATCA expectation. They expect us much more than we are preparing for this assessment. So there should be, so that be ready for to be ready for this assessments, we should focus on the ZATCA, what ZATCA expect from us. Now I will like to invite Mr. Ahmed Mukhtar. He should discuss the practical perspective from this assessment and related technology issue from the business point of view. Now over to Mr. Ahmed Mukhtar.
First of all, thank you, Burraq Partners, for this initiative and for taking the lead. Thank you, Sattar Saab. Thank you note for the audience. I know that at the end of the day, 4 p.m. Attending a tax webinar is not something which is easy, which you have committed, which shows that how much keenness there is in compliance, which prevails in the market, which is really positive to see. Now, just wanted to give a little bit flavor of what's happening in assessments. First thing I would want to add is assessments don't happen overnight. So there is not someone sitting in ZATCA and just thinking about opening up a random assessment. There is always something which is happening at the background. ZATCA is leveraging on very sophisticated systems. They are leveraging on data analytics, on artificial intelligence, as we know that artificial intelligence is changing the landscape. So there is a lot which is going on, which means that any inconsistencies which the systems will pick up will result in the audit. ZATCA have their own set criteria, which we know from the experience, which we know from what is happening in the market. They are sometimes targeting certain industries. They are targeting certain revenue levels. They are targeting certain other criteria. So as a tax professional, as a finance professional, it is very important to keep an eye on what is in the radar of ZATCA. It's always advisable to have a very strong relationship with your relationship manager. He is your point of contact with the ZATCA assessment team. So ZATCA have done internal lot of changes. One of the key change is that they have minimized the direct interaction of the tax inspectors with the taxpayers. So there is always a middleman, which is a relationship manager. It's very important that you have a very strong working relationship with the relationship manager, just to make sure that there are no communication and expectation gap between us as a taxpayer and the tax assessment inspector. The last thing that I would want to add is it's always, I wouldn't say advisable. Now it is a must that you prepare beforehand. We don't wait for the ZATCA to knock on our doors. We don't, one fine day, we don't want to wait for the email from ZATCA. We want to make sure that we are well prepared. We know from the experience that what is the standard query email from the ZATCA. To begin with, what do they ask for? What kind of things they're looking into? Being the part of the profession, we all know that. So it's always advisable to prepare yourself before time. And just I will conclude with one last comment which Rehan have made is it's no more about filing the tax returns. Tax returns have been automated to a point that now the tax authorities have started filling up the tax returns for the taxpayers, and we'll talk about it in a bit more. So filling up a tax return is no more a tax person or a tax team's job. It has gone beyond that, for which I would want to hand it over to my friend Huzaifa, who would shed some more light on, from an industry and from a practical perspective, being in a controller position, what it is and what it takes to be prepared for the ZATCA assessment. Thank you, everyone.
Thank you, everyone, for joining in the webinar. Thank you, Mr. Ahmed, for handing over the discussion. I would like to mention about this from a financial controller perspective that Zakat assessments have been a regular thing now. ZATCA has been approaching every company now and then regarding the returns that have been filed. It could be prior year adjustments, or it could be current year assessments and historical data. So now with the change that ZATCA has bring in over the period, they have been very much optimized, automatic. They have been having the information of the last 3-4 years through different details that have been shared. They have been connected with the Ministry of Commerce as well. So they have quite good links with the financial information that have been submitted to the authorities. So there is a synchronization between the governmental authorities, and your information is being tested across all borders. So your information should be compliant with all the regulated information, like compliance with IFRS. It is a trigger somewhere where you act as a principal in terms of ZATCA law, but you are acting as an agent in terms of the financial reporting perspective. So that is one of the key challenges from a financial perspective that we have to face, because as per the ZATCA law, we are the service provider. However, from the IFRS perspective, we are just a middle person. So these considerations have to be considered while responding to ZATCA, having complete information as to what to be responded with the help of consultants, and definitely our historical experience that we have over the periods from the assessments that have been coming up across different companies within the group and outside the group. Handing over to Mr. Abdul
Abdul
Sattar
Sattar.
Sahab.
Thank you, Huzaifa and Ahmed Mukhtar, for your wonderful comments on the assessment. Obviously, at the end of the assessments, we have a tax planning. Now we are moving to the segments two, that is the about e-invoicing and phase two. After the implementation of first phase by ZATCA has moved drastically and gradually is moving to for the compliance of phase two requirements. So what in this segments we will discuss phase two, what are the phase two requirements, and what is the wave-based onboard concepts, what are the failure points, we will cover this, and what are the controls that to be implemented to counter these failure, and what are the business impacts for this e-invoicing area that we will cover in this segments. Phase two of the ZATCA rollout is wave-based, determined by VAT liable revenue. So it is based on the revenue based and confirmed through official notification at least 6 months before the integration deadlines. For example, now this in these days, this is 26th wave has to reach to the level, and it is now almost 375,000 Saudi Riyal, and it's required integration till 30th June. So every waves is have a 6 month time before the implementation of this phase two segments. Now business should act now by confirming their waves notification, assigning ownership, validating ERP, point of sale, onboarding, ensure integration testing, and exception handling readiness, and align finance, its tax team, and IT team uh, on a unified timeline and checklist to keep the invoicing stable to go live. So this is the phase two first to comply with. Now, what are the common failure points in this phase two? In practice, phase two implementation often fails due to incomplete invoices fields, weak ERP and point of sale integration, inconsistent tax coding, and poor achieving that break the audit trails. Practical fixes include the automated pre-issuance data validation, robust API integration with the end-to-end testing, and secures searchable archiving with clear retention and monitoring. Monthly control should reconcile e-invoicing outputs to VAT return and general ledger, clear error and rejection under a defined SLA, and review exceptions such as credit notes and tax coding variations. Now, what are the defense designing effective solution for this e-invoicing? To address these challenges, organization must prioritize operational fixes over the short term. Work around automated pre-issuance data validation ensures invoices are compliant before the generation. while robust API integration with end-to-end testing to reduce manual integration and minimize rejection risk. This is phase 2 e-invoicing implementation summary that I have discussed in on the form of legal side. Now I will invite Mr. Ahmed Mukhtar for the practical aspects of this phase.
Thank you very much, Sattar Saab. I think we are discussing a very important subject. But I would want to just to start with the Albert Einstein very famous saying. It says that the hardest thing is the word is to understand the income tax. So coming it from the Einstein, I feel very privileged and honored when I feel that I am understanding and delivering the message somehow regarding the taxes. And the Benjamin Franklin said, in this world, nothing can be said to be certain except death and taxes. So I think this probably is something that we all can relate to, because in Saudi, if we see that there are more and more and more taxes which are coming. So I think in the context of invoicing, I would want to start with a very famous terminology which we all have read in our IT subjects in back in schools and high schools, which is garbage in, garbage out. And today I understand that what it really means. I really didn't understand at that time, but now I really understand that what does that mean, that one wrong entry or one mistake which an accounting clerk or an accounting is doing, it ultimately affects the company. And we have seen that some of the mistakes are very expensive on the organization. So garbage in, garbage out is the key. How to control that? This is a human error, and we are still not fully replaced by the AI, alhamdulillah. So still there is always a room for human error. The ZATCA do understand that, the authorities do understand what ZATCA expects to see, that we have done everything what we could have done. And if you are able to prove, and I can tell you from my experience that they really accept it and they take it very positively. If you are able to showcase that you have done the best what you could have done, you have a strong governance in place, controls, checks, policies, control approval mechanism. So this is very important. The second important aspect in the invoicing, which is somehow overlooked, is the quality of the master data. So we have seen that, for just to give you an example, the building number in the national address need to be 4 digits. So if it is not 4 digit, if it is 3 digit, for example, you will receive a warning from ZATCA. So ZATCA will approve your invoice with warning. Now, this is such a small and such a minor thing that no one really pays attention to. But ZATCA, after they issue the warning on number of invoices, then they start questioning, and ultimately that end up in audit. And then when ZATCA will open up the audit, they will find a lot of things. So this is very important. The quality of master data in terms of maintaining the customer master details, even your own details, your item master. This is very important. Procedures is a very critical component of the invoicing. Once again, something which is somehow overlooked. It has to match with the business requirement. It has to match with the ZATCA requirements as well. So sometimes we see in the context, in the ambit of invoicing, we see there is a gap between what business is expecting in terms of a procedure that is governing the invoicing versus what is the ZATCA requirement. For example, if a credit note has to be issued, it has to be issued as per the requirement, but business requirements are different. So there is always a gap that we see, practically speaking. So this is where obviously we need to seek consultations to make sure that we are not exposing ourselves to risk. The last point that I would want to add is we should always focus on the gray areas, the areas which are not very clear in the regulation. For example, how to treat in the invoicing your retentions, if you have multipliers, if you have penalties, exchange rate differences, all these kind of things, which are somehow not very clear in black and white in the invoicing regulations, data dictionary. And also it goes without saying that ZATCA is doing updates in the data dictionary, which governs the invoicing framework, which is very important for us as a professional, as a finance professional, to keep an eye on what is coming, what are the updates. So to make sure that we keep our processes and our procedures and our systems in line with the ZATCA requirement. So with that, I would want to hand it over to my colleague, Huzaifa, who would want to share his experience on how is he handling those challenges.
Thank you, Mr. Ahmed. As you previously mentioned that there are certain areas or issues that we as finance professionals deal with ZATCA, which is related to some key missing items in the in the master data. You can say incorrect invoice, or there are certain fields that ZATCA would like to see, but it is missing. So it is very much needed that all the finance professionals are properly trained. They are aware of all the requirements that ZATCA is. And that's therefore ZATCA has given us a 6 months framework so that our teams are ready post implementation. So pre-implementation is something where our inputs are required. So we need to understand as finance professional, we discuss with our zakat consultants and business people what informations we can get from the suppliers, what information we can get from the customers, and what ZATCA is requiring us to do. Like the national address that you have mentioned, there are certain issues with the national address that some people do not have actually the required field of the national address. So there are certain exceptions that have been given by the ZATCA team, but that is very much necessary that we connect with our relationship manager, inform of the exceptions, and get those cleared with the ZATCA. So what as a finance professional I have understood is that we need to be a bit proactive in terms of resolving those issues before ZATCA jumps in. Major thing that we have seen is that the quality of data that we have. So the effect of master data protection network that you have, the controls that you have in place, monitoring of the information, closeout periods, a periodic testing of the information that goes out in terms of the VAT returns as a third party is something that we have been doing to ensure that we do not miss anything, which reduces the risk of ZATCA assessments. With this, I would like to hand it over to Mr. Abdul Sattar back again.
Thank you, my friend. As I conclude, from my point of view, from the discussion of Mr. Ahmed Mukhtar and Mr. Huzaifa, phase 2 integration readiness view, what finance, tax, and IT must fix now. It's a time to plan for the phase readiness of the phase 2. Now, segment 3, which is most important in this time, that is VAT law updates and year-end consideration that business need to be considered. VAT amendment introduced in 2025 mark a turning point for the compliance and operations. Business must upgrade their system, ensuring ERP and accounting logic aligned seamlessly with the E-Invoicing update VAT implementation. Strict inputs VAT deduction condition will place added pressure on the cash flow, while operating model must adapt a electronic marketplaces are now deemed suppliers, requiring changes to the contract and pricing. At the same time, documentation burden are rising, with tighter evidence needed to zero-rated exemption and risk of non-compliance, including adjustment, fines, reputational damages. These are the impacts of the business for these changes. That is need has to be changed for system upgradation, cash flow pressure have been, as I discussed before, and higher documentation burden has been moved to the due to zero rated exemption invoices, and there is a lack of risk and penalty has been rationalized by the ZATCA. So these sectors in these amendments need to be noted, and it's important to keep dates on their radar. Most amendments took place in 18th April 2025. VAT grouping rules with new eligibility criteria will apply from 15th of October 2025. Electronic marketplace will deemed supplies effective from 1st January 2026. Credit and debit note must now be issued within 15 days from the end of the month of the triggered events. And finally, the regulation broadened the definition of services and clearly areas such as exports, scope, and blocked input WIPs theme. These amendments will obviously affect the Q4, which is ending on 31st December. Maybe it's take 6 days further, and will also affect the next quarter for the 2026. Now, for the practical and technical reason of impacts of these changes, I would like to invite my colleague, Mr. Ahmed Mukhtar. Thank you.
Thank you very much, Sattar Saab. So I think once again, I would want to start with a very funny quote, which says, VAT is like an annoying friend who always manages to tag along on your shopping spree. So I think what I would want to add is VAT is very operational. So this is one of the tax which is very operational and it directly impacts, it has a direct impact on your operations. It has a direct impact on your cash position. It has a direct impact on your customers and suppliers relationship, direct impact on your systems, on your processes. Yeah. So this is a very unique tax in a way that it really closely knits together your systems, your processes, your cash position, your relationship with your customers and suppliers. Regarding the updates, I think very critical update is the timing of issuance of a credit note. So again, something which was widely misunderstood in the market, whereby it was misunderstood that you are open to issue and report the debit notes and credit notes whenever you want. It was considered as somehow discretionary. So ZATCA have now issued a very clear-cut clarification that it has to be issued within 15 days of the following month of the triggering event. In the VAT, practically speaking, I have seen that there are a lot of myths and there are a lot of myths. I think this is probably one of the taxes which has many misconceptions. Yeah. So, for example, there's a lot of misconception, even the trade within the GCC, where it is considered as in the same model as European Union, whereby it's considered as a free trade, which in reality is not effective yet till every single country in the GCC is on board on the VAT and they will make something called electronic service solution ESS. Till they will activate this, it is still considered as, so for us from the VAT perspective, any trade with Bahrain is exactly same like any trade with Ethiopia as an example. Yeah. For example, there is no need to report the nominal supplies in your VAT return. There is no need to report zero-rated suppliers. There is no need to report exempt suppliers because there is no VAT impact as such. ZATCA do consider it. ZATCA look into these things and then they penalize you as well because penalties. The VAT is again a very unique tax because there are a number of penalties. Usually for the other type of taxes that we have seen, the direct tax and e-invoicing, it's usually one or two type of taxes. In VAT, it's a long list of penalties, and sometimes ZATCA takes a very extreme position and they impose significant penalties. So there are many different types of penalties in VAT. The timing difference is something which is really cause of a concern. This is a pain to explain to ZATCA because our timing of reporting the VAT return does not match with the revenue recognition criteria of accounting standard. Now, ZATCA inspector not being technically expert to understand what IFRS is saying, to make it clear for him and to prove that what you have done in your VAT return and in your financial statements, both are correct as per their respective frameworks. So VAT follow the VAT regulations, your financial statements follow the IFRS framework. So, and then this gaps causes a huge penalty. And then sometimes also there is a misconception that ultimately everything is getting reported. Yes, but then the timing difference, if you're not reporting at the right time, you will be penalized for the period when you have actually reported. And I have practically seen that sometimes the impacts are significant. Yeah. So anything which you are not reporting under the impression that there is no VAT on that, or anything which you're not reporting under the impression that ultimately it is being reported, again, these are the common triggers as what we have seen in the first section as well, where ZATCA closely looks into these things. And then one more comment just to add on the recent updates. Now, if you see that the scope of the taxable supply or taxable service is very broad, and when I read this update, I felt that they have actually covered a lot of things. For example, if you are refraining someone from doing a certain act, and there are many intangible things which were not considered as a taxable supply in the past, ZATCA have now made it as a part of taxable supply. Again, something very new. We haven't really seen it in practice. We will see how the things would unfold. So these are, just to add on few of the updates, and then as well, there are a few other areas that we always need to keep an eye. For example, ZATCA have opened a window for the non-resident VAT payers to claim the input VAT, to claim the VAT refund. So there was a window that was opened, and then likewise, we all know that there was an amnesty window as well, which is now coming to an end. So with the time of evolution, ZATCA is also opening up the window, and they are giving chances to the taxpayers to correct their position, to correct their systems, to strengthen their tax governance. This is a very soft side of ZATCA that we are seeing now. My personal view is within some time, we will see the other side of the ZATCA, where there will be a lot of audits, lot of assessments, lot of penalties, because ZATCA have given enough time to all of us in the market. I think we all do agree that ZATCA have given enough time. They've been very lenient. They've been very cooperative. They are issuing the documentation in English, which is of a very good quality. They are open. They are organizing so many workshops. They are organizing so many awareness sessions. This is the very soft side of the ZATCA that we are seeing right now. Very soon, there will be other side that we will see, and that side most likely will not be very pleasant for all of us to see. And whenever someone comes and asks you for the data, you know where it is fully reconciled, it is in a shape that can be presented to the tax authority. With that, I would want to hand it over to my dear friend and colleague Huzaifa to shed some more light on how he is handling the VAT updates.
Thank you very much, Mr. Ahmed. As we all discussed over the period that system upgrades, cash flow pressure, VAT assessments are there in pipeline. One of the key elements that ZATCA has emphasized is on zero-rated VAT as well, which is exempted, or you can say zero-rated. So from a background of travel and tourism industry, we have both the zero rated VAT as well and the normal VAT, and they have been asking us very much detailed information on how you can prove or justify that it's zero rated. Although the law is very clear, but definitely there are certain aspects that you have to be very much defined, where the consultants are being used to ensure that our wordings, our explanation are up to the mark in terms of the ZATCA laws. For example, zero rated VAT on international tickets. So it is very much required, justified that the supplier is not a local supplier. It is an international ticket. The supplier is from international, because we being an agent here in KSA are serving to public at large. So that area is one of the gray areas where a lot of assessments have been opened in the group's name and have been cleared overall. But definitely the cash flow pressure comes in because they require you to submit the assessment value upfront, and once all the assessments are completed, the audit trails are completed, you might need to go to ZATCA level 1, ZATCA level 2, to the level that the company is ensured that they will be in a position to win the contracts. Till then, your cash flows are frozen. So a lot of monitoring, working capital management is required, and this needs to be forecasted by the financial controllers, how to manage those cash flows over the period. With this, I would say that compliance is necessary, and we need to be very much adaptable to all those regulations that are coming up. Be proactive in getting those informations, getting the teams ready to ensure that we do not go into an area where ZATCA comes to us and effectively create a problem, and there are certain penalties that are significant to the companies at large.
Sure. Well, thank you very much, my dear panelists. So let's go directly into the questions. And I have a lot of questions in my inbox, so I can start from question number 1. So I think question number 1 is for Mr. Ahmed Mukhtar. Case is, if a person fails to submit its last 3 quarters VAT return, each quarter due amount is, let's say, 100,000 reals. Can we file these pending returns in one go now? What would be the penalty for non-filing of VAT returns, and what would be the additional tax for non-payment of amount due? And would this delay lead to ZATCA audit?
Yeah, I think very pertinent question. So first thing to bear in mind that we currently have amnesty going on, but amnesty only covers the period till the announcement of the amnesty, because once the amnesty is announced or extended, they cannot keep the door open for the taxpayers to amend their returns. It is not fair. It is not fair on the tax authorities' part and on the taxpayers' part as well. The best solution in this case is you open your system, you file the return one by one. If you are doing a monthly filing or a quarterly filing, if it is a monthly filing, you go open VAT return one by one, do the filing. make a payment and then go to the next filing, make a payment and then go to the third filing and make a payment. Usually when you will be submitting your VAT return, the sadaq you will be receiving will have the penalty already added to that. And most of the time, the bank will only accept the payment which is appearing on your sadaq. So if you feel that you have sufficient grounds where you want to discuss to ZATCA, usually I have practically not seen ZATCA giving any leniency in these cases unless it is covered within the amnesty. In that case, then you should speak to your RM directly, explain him the situation, let him give it a try, which most likely he will not be able to get it waived off, and you have to pay VAT amount and the penalty. One piece of advice is that file one VAT return, make the payment, get it cleared from the system, and then you go to the next filing of the VAT return, because we have seen practically that the system is sometimes allocate the amounts to the wrong VAT return, which then causes a lot of issues in ZATCA system, and then it takes a lot of time to get those resolved. So open one VAT return, file it, make a payment, then you move to the next one. If you believe that you have a sufficient ground that you can get this penalty waived off, speak to your RM and see if there is any way out. The third option is also to use the installment plan. If you feel that the payment of VAT is huge, you can also speak to your RM to explore the option of installment plan subject to satisfying certain requirements which ZATCA do have. So I hope that answers your question.
Great. Thank you very much. I think the next question is about relationship manager. Is a relationship manager a third party or ZATCA person? And I think I can maybe add another question to it. And what is RCM and how to file this in VAT return? Is RCM only applies to services or to import of goods as well? So Ahmed,
okay,
again,
so we'll take these both questions separately, Rehan sir.
Okay.
First question on RM. So relationship manager is basically ZATCA employee, and he's your account manager. Yeah, so ZATCA have started the system few years back where they have hired a big number of relationship managers, and these relationship managers are directly interacting with the taxpayer. So they are the communication channel with the taxpayer. And then internally, if it is an assessment, if it is a system issue, whatever it is the RM's responsibility to coordinate it internally. For you as a taxpayer, your single point of contact is the RM. And that is why, as I mentioned earlier, it is extremely important that you have a very good relationship with the RM. Now, if you log into your portal, you will find the contact details of your RM and his supervisor as well. If you feel that your RM is not responsive, you can actually reach out to his supervisor. And if you feel that still things are not moving, you can give a call to ZATCA directly on their unified number, and you can discuss with them, and they can get your relationship manager replaced as well. But I can tell you something, that RM is the key. He's the one who gets your things done. Your Zakat certificates are not being issued. There are delays. There is some system issue, your E-Invoicing issue, your assessment query. For everything, the answer to all the questions is the RM. RM is the one who gets the things done internally. So it's very critical. And RMs, what I have seen from my experience, they are usually very responsive because they have their very strictly monitored KPIs. And they're usually very friendly. They are not what you might imagine of any tax inspector, and they are not the tax inspectors. They are the accounts manager. Yeah. The second question on the just to close this, most of the companies have their dedicated RM depending upon the size of the company, but not all the companies have their RM. If you do not have your dedicated RM, then unfortunately you have to speak to ZATCA, either request them to assign an RM, or then you have to speak to their helpline and get your things done through the helpline, because RM is not for each company. For smaller companies, they usually are not given. But if you're a medium-sized companies, for sure you will have an RM. The second question is on RCM. So reverse charge mechanism applies on the import of goods and import of services both. From 2020, ZATCA, as you all know that from 2020, ZATCA, when ZATCA became ZATCA, before it used to be the Tax Authority and Customs Authority, we used to pay the VAT to Customs Authority upon importation, and we used to claim it in our VAT return. Now, during the COVID, ZATCA wanted to ease up the burden on the taxpayers. And then when the authority became one, the customs and the tax authority, then they said that we have to collect the money and then we have to give the money. So let's have a deferred tax mechanism or reverse charge mechanism in place, whereby we don't enforce the taxpayers to pay the money, rather report the import VAT in their reverse charge mechanism. So before you were paying, you were claiming. Now you don't pay and you don't claim. So it is the same thing, but it has definitely eased up the cash flow impact. And the second thing that we need to report is the import of services. So import of services have to be reported under the reverse charge mechanism. Your amount you're reporting in your reverse charge should be reconciled with both your import bayans and your monthly withholding tax. They need to be reconciled with both. If there is a reconciliation differences, that will be questioned. The second thing which is important is that, again, you might feel, and again, it's a myth that there is no VAT that we see on the VAT return and hence there is no penalty. No. If you are not reporting the reverse charge mechanism in a timely manner, there is a penalty, because without going into the technical detail and in the interest of time, the reverse charge have both input and output impact, as we know. So I don't want to go into the technical detail. So the ZATCA position would be that it has an input and output impact as well, and therefore we will impose penalty on you. So not reporting in a timely manner the reverse charge mechanism definitely exposes you to penalty.
Well, thank you very much, Mr. Ahmed, for the detailed reply. The next question is for Mr. Sattar. In case of a business is acquired by a MISA license holder as a separate entity, the business is retail based and annual turnover is expected to be around 2 million Saudi riyals. The entity needs to e-invoicing enabled, although the business has not yet been a year. Mr. Sattar?
Thank you. As I earlier discussed, as per ZATCA regulations, phase 2 of the ZATCA rollout is wave based, and which this wave base has been determined by the revenue, not with reference to their period of establishments of the organization. It's a revenue based. If you touch the revenue, you have to ready for the phase 2 ZATCA integration. So in this case, as in this question they have mentioned, the annual turnover is 2 million riyal annually. So it should be linked with wave based, not with the period of establishment of the organization, even then whatever is the age of this new business. So in my mind, it should be integrated with the ZATCA on the basis of revenue.
Just to add on, the criteria for e-invoicing is based on historical revenue. So usually whenever ZATCA announces a wave, they say, so for example, the recent wave which is going on, they have given a revenue which is 375,000 either in 2022, 2023 or 2024 fiscal year. Yeah. So e-invoicing is usually historical based, and I know again because the VAT registration is usually on a prospective as well, but e-invoicing specifically is on a historical basis. And the second thing is, if you are picked up, usually ZATCA sends an email, and then the RM or ZATCA will contact you, and then they will ask you. So it is not something that that they will miss to communicate to you. But just to answer your question, it is based on historical revenues.
So, but I think Ahmed, he's saying that Mr. Hamza is saying that yes, our historical revenue is not yet anything. So, in that case.
Yeah, if there is nothing, and
right?
plus, if there is nothing, and plus you have not been informed, as a proactive approach, check with your RM or send an email to ZATCA and ask them. But from my understanding is that you are not part of the e-invoicing, but I think now they have reached 375,000. So probably the next invoice will be we call it catch all category, where they will say that everyone in the country would be part of the final wave. So most likely then you will be part of that wave.
Okay, thank you very much. The next question is for Mr. Huzaifa. When objecting to a VAT assessment, how should entities calculate the required 10 to 25% payment or 50% bank guarantee, particularly when the assessment includes multiple disputed items with varying confidence levels?
Thank you very much, Mr. Rehan. It's a very good question and a genuine question. Here it's not only management who has to decide. Basically, your regular VAT consultants are part of these assessments. And when you go into those assessments, basically you deep dive as to what the dispute is. And based on the historical trends, you are aware of what disputes you will be in a position to win and what disputes you really are in a position that you will not be in a position to win the case. So effectively, historically, what we have witnessed is that we have to pay it in full, majority of the cases. But however, the disputes you have supporting grounds and significant supports that you have to do is you pay 25% of the normal disputes rather than 10%, which is then accepted by ZATCA to go into the dispute case and under the audit perspective, and then to ZATCA level 1, 2, based on how the proceedings go. It's not a one-time thing. You just need to be proactive with your zakat consultant and the lawyer that you have hired on these proceedings. Mr. Ahmed can assist in this if there is something else that he is aware of.
Yeah, I think rightly said. And again, coming back to the same point, the relationship with your RM is critical, because he's the one who then, because what you receive is a Sadat notice from ZATCA, and then it already specifies an amount. Yeah, and this amount then becomes payable. Now you have to speak to him, and then he's the one who can actually help you to get it reduced based on the points, the defense points that you have, the points that you're objecting, not objecting. So he's the one, and he can take it up internally and he can get it done. By default, the default position from the law is, I think maximum we all know that they can demand up to 50%, and we have seen that ZATCA going to that extreme where they are asking for a 50% bank guarantees.
Well, thank you very much. I think the next question is again for Mr. Ahmed. Can you please guide in relation to KSA VAT refund? Is it easy to obtain the refund from ZATCA, and what documents are need to submit? We need to. So
as I understand correctly, we are talking about the VAT refund for non-residents, non-resident companies. If you are a resident company and you are already filing your VAT return, so let's take it question in two parts. Either you are a resident or a non-resident. So you are a resident company, you are filing your monthly or quarterly VAT return, where you are reporting your taxable supplies and all inputs. Advisable position is that you don't ask for a refund, cash refund, rather you keep it as a credit, and the credit stays in the ZATCA system, which you can then get it set off against your future tax liabilities. The benefit of not triggering the refund is that ZATCA will usually do not open the audits. If there is a cash refund, as per ZATCA internal procedure, then they will open up the audit. And then again, we know that you are inviting the uninvited guest to your home, and if your house is not in a good shape, then rather than getting some refund from the tax authority, you will actually end up paying more in the form of assessment and penalties. So, and credit is usually a default position. If you have filed your VAT return and there is a credit, you don't have to do anything and let it remain credit, and you will be able to use the credit against your future tax liabilities. If you request for a refund, in some cases, they will give you immediate refund. I have seen refund coming in few hours to few days time, but refund is usually quick. But in many cases, they want to open up an audit, especially if the amounts are big, that they will open up an audit, and then uninvited guests.
Okay, thank you very much for that. The next question I think we have from Shah Adil Zain. One company is to issue invoice to its supplier for liquidated damages due to not delivering the services on time. Will VAT apply on charge of LDs?
Yeah, I think it's a very important question. Maybe I would want to add from my side, then we can hand it over to Sattar as well, being a subject matter expert. So look, the VAT law very clearly defines what is a taxable supply and what is not a taxable supply. And the ZATCA strictly goes with the definition, if it is a taxable supply or if it is not a taxable supply. So it again, most likely this question, there is no yes or no answer straight away. We need to look into the business model of the company, the contract, and then we need to see that if it fulfills the definition of a taxable supply or no. If it fulfills the definition of a taxable supply, then yes, it is subject to VAT. If not, then it is not. Yes, Tarsab, you would want to add anything?
Yes, I would just add you because application some taxable activities and related with the taxable supplies. It would be important to see the contract requirements. If it is the part of contract taxable activities in routine form, yes, at this time, this will attract the VAT penalty, also attract the VAT. And it is liquidated damage is mentioned in the contract. So this is not, this will not be in that case will be the taxable activities. So it activities based on their contract. But if the contract is mentioned in this case of scenario, this has to be attract the liquidated damages, then yes, it will attract the VAT, and otherwise it will not attract one.
Yeah, and I think I would want to connect this question with my earlier comment that VAT is very operational tax, as I mentioned earlier, and you see that how it impacts. Like for the other form of taxes, probably this question might not be relevant. It's a straightforward penalty. For example, for a direct tax, is it a deductible or non-deductible? Non-deductible, you pay taxes. That's it. When it comes to VAT, it is very operational. Yeah, and it has a direct impact on your policies, procedures, on your relationship. And imagine if the customer is under the impression it is not subject to VAT, and one fine day he receives the tax invoice with the VAT on the liquidity damages, it can have a direct impact on your relationship. Is your system capable to understand that in what scenario it is subject to VAT or not subject to VAT? So that's why VAT is very operational, and in some cases, usually for VAT, there is no right or wrong answer. It's very operational, and that's why, as Sattar Saab have mentioned, you have to look into the contract, you have to look into the business model of the company, then you have to go back and see the VAT framework. Does it fall within the definition of taxable supply? Like recently, in one of the recent amendments, they have actually broadened the scope of taxable supplies, which is the services. And if you go and read those updates, it's little bit worrying because there are so many things which they are now considering within the ambit of taxable supplies as a service. So unfortunately, there is no yes or no right or wrong answer to this question. It depends, and then the documentation and the business model need to be looked into to answer a precise question.
Thank you, Ahmed, for the detailed answer. Well, I think it's already past time, what we promised, and I think I can see more questions coming in. But what we can do is, after the webinar, we can prepare a list of the questions that you have asked, and we can then send the replies to all of the participants. So just moving towards closing the session, I would like a quick last takeaway from all the participants. So starting from Mr. Sattar, you have any last few words? And then Ahmed Mukhtar and Huzaifa, please. Thank you.
Thank you very much for your valuable time, my colleagues. I just conclude my discussion of this webinar. The time has started with the documentation of economy. ZATCA is basing their all the diversion to the technology-based audit and integration of your data, and asking you to amend your business requirements according to the need of the era. So my submission for the all audience is that be ready for the every change of implemented by ZATCA according to the need of the business. You have to comply with the all requirements. Thank you.
Mr. Ahmed, please, your time.
Yeah. So I think, so for me, I always love to give the very practical examples which people can relate to, because tax is not an easy subject. The way I see everything, all the updates, technology driven, everything, you need to make sure that your house is in order, because every single transaction is being reported to ZATCA. Now the reporting is done at a transactional level. The government authorities are completely linked with each other. ZATCA is linked with the banks. ZATCA is linked with all the authorities. Sometimes we have seen that ZATCA comes up with the assessment and the information they have received, and sometimes even the companies themselves are not aware that from where they got this information. Keep your house in order. Keep your house clean. Make sure housekeeping is the topmost priority. Focus on your policies, procedures, overall governance, your relationship with the tax relationship manager, having a very strong consultant like Burraq on board with you, who will be your partner, not your advisors or consultants, I would say. So all these things would help you. At the end, you want your housekeeping at the top notch. This would be my final say. Thank you.
Thank you for the kind words, Ahmed, as always. Yes, Huzaifa, any last words from your end?
I would just like to say that being finance, we need to be proactive, continuous education, development, regular trainings, that needs to be in place. The webinars, the seminars that are being conducted by ZATCA needs to be attended by the relevant teams to have appropriate information. Give the information to your business teams to ensure that there is nothing that lags where you as finance professional get a hit, that certain information that is required or mandatory the business teams are aware of, so that they can discuss the same with your outside vendors specifically. Because the challenge right now is that people within KSA or within the GCC are aware of those laws, but when it comes to your foreign vendors, it is a challenge. So get those details upfront to the business teams that these information are going to be critical, so that they can deal with the customers accordingly. Because it's not like something very simple or easy going. Your business also face difficulties in getting those information, and being finance, you need to be adaptable. That's where the RM role comes in, which Mr. Ahmed have been stating quite loudly, that we need to have the RMs very much close to us, so that they can assist us where the information can come in, what information we can skip, or where there is a need of any sort of information help guidance. They can assist us that, okay, in case of this information you can get this sort of information, to ensure that you are complied with. So compliance is mandatory, regular, and you need to keep up with the pace that Zatka is going. In fact, be ready for the last wave, and the last wave would be much more quicker and faster than it is anticipated as of now.
Okay. Well, thank you very much. Towards the end, I sincerely thank our panelists for sharing their valuable insights and real-world experience. The key takeaway from today is clear. Tax compliance in Saudi Arabia is now more data-driven, more integrated, and far less reactive. What ZATCA leveraging assessments with ZATCA leveraging assessments, e-invoicing analysis, and system-level data, organization must be prepared before issue arises, not after. So they have to be proactive, as I think my colleagues mentioned earlier. And strong documentation, aligned system, and proactive governance are no longer optional. They are essential. So at Burraq Partners, we support organizations in moving from reactive compliance to proactive, defensible tax positions, whether through assessment readiness, VAT risk reviews, or phase 2 e-invoicing support. Thank you once again for joining us today. We hope you find the discussion valuable and actionable, and we wish you a successful and compliant close to the year. Thank you very much. Have a great day.
Thank you, everyone.
Thank you. Thank you, all of you.
Thank you, everyone.
Thank you, everyone.
Thank you.
Thank you.